All right, so today I wanted to make a video on a semiconductor company that I've never talked about before. I have started a position in this company a little bit below the current price, but I really like it for several reasons, so I'm going to get right into it here. As far as semiconductors go, I think it's one of the best industries to have exposure to because it's an industry that the demand is only going to go up over time. So if you have exposure to the best companies in that industry, you're going to do very well, in my opinion, right? Again, not a big problem, but a problem with this industry is, number one, you have a lot of companies that trade at extremely high premiums, right? Think of Nvidia, AMD to a degree, right? These are companies that trade at extremely high valuations that inherently are going to make it very risky to invest in those companies, right? And on top of that, it's going to be a cyclical industry, at least to some degree, right? And I think the data shows this, that we are at the early to mid stages of a, for lack of a better way of putting it, downturn in the semiconductor industry, right? We had a massive bump in demand in 2021, 2020, especially 2021, but 2022 things started to drop off. 23, I think they're dropping off even more. And I think 24 probably will be where things kind of bottom out, right? That's just my prediction, and I think we'll see another really nice bull run. And a lot of people probably hear that and they think it as a negative thing, but the reality is it's a positive thing, because over the next year or so, I think we're going to see some of these really, really high quality companies that are going to be trading for a discount, and that's going to be a very good time to pick them up, right? So let's get into Lam Research here and go from there. So again, $82 billion company, so it is a large cap company. Free cash flow yield of 5.6%. Again, that's pretty good for a tech stock, right? That's pretty good. If we look at the valuation here, again, analysts are kind of bearish on it. We'll get into the dividend later. Growth is average, right? I mean, operating cash flow is going up a lot, but net income's going down, operating income going down, gross profit. Again, like I said, I think that we're in a not necessarily the best time for semiconductor companies, but on the flip side, that's going to mean that the valuations are going to come down, which are going to mean that it's going to be a good chance to buy. Again, obviously my opinion. Again, if we look at the financial health, again, extremely good situation here. Current ratio of 3.1, that's very, very, very good. If we look at the profitability is extremely good as well. Again, 26% free cash flow margin, 30% operating margin, again, extremely good there. Management does a very, very good job on this company. Return on equity, 36%. That's extremely impressive, right? If we look at the valuation, again, this is exactly what I've been talking about. Price of free cash flow, 17.7. 5-year average is 20.7. Again, that's significantly below, meaning I think this company is trading at a slight discount where it's at right now, which is why I am starting a position in this company and will continue, right? If we look at the balance sheet, again, very good balance sheet in my opinion. If we look at the cash flow here, again, this is another very important thing to look at. Again, cash flow is going up extremely quickly over time, which is exactly what we want to see. If we look at the stocks and the debt, again, this is a company that's paying down debt. If we look at this, the share price here, or sorry, the shares outstanding, again, this company hasn't issued a new share in at least 8 years, which is very, very good. They're consistently buying back shares, which is exactly what you want to see. They're not taking on a lot of debt, very little debt. So that's another good thing. Again, another very important thing here, consistently profitable. Again, you want to be investing in companies where the profits are not super inconsistent, because if the profits are super inconsistent, that's going to be a hard company to value, right? Again, look at this free cash flow margin. Again, consistently very, very good, consistently in the 20% roughly. Again, 2022 it came down, but 2023 it's came back. Again, very good as far as that goes. Again, if we look at the dividend here, let's look at the dividend. So again, we have a dividend of 1.28%. That's not great, but again, it's growing at 9.4% a year. Payout ratio is 22%. Again, that means that they're going to be able to grow it very nice in the future, right? If you'd have bought this company 10 years ago, you would have a yield on cost of about 14%, which is extremely good, right? So again, that's another one of the many reasons I like this company. Let's briefly touch on the valuations here, the historical valuations. and then I will leave it at that. All right, so if we check out the valuations here, the operating cash flow has grown at 25% per year, which is extremely good. Like that's crazy good growth. If we look at the average valuations, price to free cash flow, the average is 21. The current is 18.87, right? Price to operating cash flow, the average is 15.6. The average is 16, right? So again, if anything, this company is trading at a discount right now, right? If anything. So you could argue that it's fair price, but again, I would argue that it's a slight discount based on its historical averages, right? Another important thing here too is that the operating cash flow growth as far as the valuation goes is a little bit under 5%, right? Meaning the vast majority of the growth we've seen in this company's share price is based on actual cash flow, which is exactly what you want to see. Another concerning thing about a company is if the share price returns have been just a straight up people paying more for the company, right? To me, that's a little bit of a red flag. But this doesn't exist for this company, but it does exist for a lot of other companies, which is something you want to keep an eye on, right? Again, 25% operating cash flow growth per share over the last 5 years is crazy good. That's very, very good, which is, again, one of the many reasons why I like this company. So again, this is a company I very much like. I will continue to dollar cost average it until the valuation gets out of control, which I don't think will happen probably over the next year, maybe 2 years. So again, I think that in my opinion, this is a good company to be picking up where we are at right now. So again, if you liked the video, please like, subscribe, and stay tuned for more.